I acted pro bono in the upper tribunal in a case which was won by my client, whose wife appeared for him, represented him in the tribunal, and who alone of anybody, including experienced tax casees, had identified the error in HMRC's argument, which it had applied to hundreds of people before and since. And she said, she was a wonderful lady, a piano teacher, no tax expertise at all, but she had identified this issue. And she went to the tribunal with no experience at all, argued the point and won. And I'm pleased to say we won for the upper tribunal and the Court of Appeal as well. So it is possible, and it happens a lot. Is it advisable where we've got complex issues of law or fact? It really isn't.
Welcome to the US UK Tax Talk podcast, again coming to you from our beautiful new surroundings. Today, James Austin and Henry Lopez of Collyer Bristow join me again to talk about HMRC inquiries and what to do if you find yourself on the end of one. James and Henry come from their experience as tax litigators, dealing with both advisory and inquiry disputes. We hope you enjoy the episode. Henry, James, thank you so much for joining me again. How are you both?
Hello, Aidan. It's good to see you again. Very well, thank you. Good to be back.
Yep, very well, Aidan.
The topic of conversation today concerns inquiries and disputes with HMRC, a topic I've wanted to do for quite some time, and a topic which comes up quite a lot in the US space because of the interactions between the US and the UK tax systems. And I can think of no two better people to have on my show to talk to about, I'm going to call it compliance occasionally, so occasionally, apologies if I slip into compliance, but this is a significant part of your practice areas beyond doing what I do, which is providing tax and estate planning advisory services, isn't it?
It is. So for both Henry and me, I would say probably about half of our practice is advisory work in exactly the same way that yours is, for exactly the same sorts of UK and international clients. And about half of our practice is working on HMRC inquiries and tax disputes. And that includes proceedings in the first tier tribunal and on appeal. We've been up to the Court of Appeal successfully, I'm pleased to say. We spend about half of our time doing that as well. And I think that's a really positive thing because I think it makes us better tax advisory lawyers because we've seen this stuff tested by fire. So we know what HMRC is thinking about a lot of these things. And similarly, I think that our practice as tax advisory lawyers improves our tax litigation because we get it. We get the technical tax provisions. We're not just fighting about, something this week and something entirely different next week. We are specialist tax litigators.
And I suppose, Henry, from your perspective, you've trained at the feet of the same illustrious partners as I have, and you've probably had it drilled into you some of these phrases like, don't write down what you don't want read out in court, and these kind of things. Well, with your litigation hat on, you have to think in that tone. What I'm saying, what I'm advising, even if it's in the advisory half of your practice, you have to think, this is something that could well really matter. So whereas, those of us on the advisory side, we might offer some fluffy and generic advice. We might use the word broadly speaking. We might say in general, not an avenue that's always open to you when you've got your litigation hat on.
No, exactly. And it brings the importance of the advice into sharp focus for me and for us in the practice, that this is something that a taxpayer is relying on. And it could be the difference between them ending up in the first tier tax tribunal and not, with a whacking great legal fees bill as well. It does bring it home, the importance of what we do on both sides.
And we in the firm are thankful for your firefighting services.
Yeah. I think just to your point, Aidan, I agree. Lawyers use lawyerly phrases like, in general terms and broadly speaking.
I've never used these in my entire practice.
One might understand in tax disputes, the really material difference is that clients want to know prospects of success reduced to a percentage number. And so the real job of work for Henry and me and the others in our team is to say, well, on these facts and on our view of the law, you have a 60% likelihood of success at first instance. Broadly speaking, doesn't cut it at that point. Clients quite reasonably want a laser-like focus on prospects to be able to assess commerciality of is this an appeal they're going to go with.
I used to joke earlier in my career that one of the reasons I didn't become a litigator is because I didn't like the idea that in making my client's life good, I was making someone else's life bad. I guess as a tax litigator, that's probably not quite so bad because the person whose life you're making is bad is HMRC. So
no, I do think it's important to say, for in the interests of balance, that HMRC have a very important function to carry out, and it's in the best interests of the nation as a whole that the correct amount of tax, in heavy inverted commas, is paid by every taxpayer. And our job as advisory or disputes lawyers is to make sure that our clients do pay the right amount of tax. So we have no desire to immiserate our friends and colleagues at HMRC unless they are the ones who really annoy us, because there are some bad apples. But they are few, I should say. Few.
Thank you for pulling me up on that. So I want to start at the place, Jamie, you just started, which is talking about people paying the right amount of tax, because the tax code is more complex than I think it's ever been before. It becomes particularly difficult in a cross-border context because you are dealing with someone coming out of a previous tax code or staying within within that tax code and now entering the UK tax code as well. And so we talk in broad terms about people being non-compliant. We talk about people having not done something which they should have done. I put it to you, Henry, before we start talking about what solutions exist and what the process looks like for people, what are some of the ways when we talk about someone being non-compliant that they can be non-compliant?
There's lots of different ways you can be non-compliant in the UK in a tax context. Stepping back a bit, non-compliance in a tax context is not filing a tax return in accordance with your statutory obligations, being in a complete and correct manner. Lots of different scenarios can occur. I mean, there could be not filing at all, filing late, filing knowingly incorrectly, filing reasonably incorrectly. There's lots of different permutations on how someone can foul is the wrong word, but not be entirely compliant in the UK.
Yeah, that's absolutely right. And Jamie, that's where I want to take us first, is when we're at this first juncture of what solutions might exist for someone. Your job as a disputes expert is to uncover what the degree of non-compliance has been, because the solution to the problem is different in each case, isn't it?
Oh, completely. I mean, safe to say that my first preference in all cases is to try to settle matters amicably and confidentially with HMRC in correspondence. So the first thing for me to do is to understand the relevant tax provisions, to understand the facts of what the client has and hasn't done, and to be able to put the best narrative to HMRC to explain what has happened, why that has happened, what I think the consequences of that are, both as regards payment of tax, and if tax or reporting are late, interest and potentially penalties on those as well, and to be as open and candid with HMRC as possible right from the outset, in the hope of persuading the officer that these are not bad people, these are people who have made a mistake, and that actually they're making a reasonable and correct disclosure, and with a view to settling the matter in dispute as quickly as possible. Fortunately, I'm very happy to say we've actually got a really high success rate. Our track record of settling matters in inquiry, in correspondence with HMRC, is great, and something to shout about. Matters don't typically go towards litigation. Where they do, it's often because HMRC and we take diametrically different approaches, either to the facts of the matter and or to the relevant legal provisions. And where that happens, if the client wants to pursue the point, then dispute in the tribunal is an inevitability.
And Henry, in this US context, because we are a US UK Tax Talk podcast, we have this extra complexity because one of the ways, in my experience, you end up with a lot of non-compliance in the UK is because people have their eye very closely on the ball on the US tax code, particularly if they've come to the UK and are used to paying tax in the US, used to paying tax to the IRS, and their US tax obligation has not changed. Now, I ask you to, as an example, if you can even throw your mind back as far as the recent past, limited liability companies, for example, taking a very common example, just as an example, for the risk of double taxation and thus the risk of not paying your UK tax. These are the sorts of areas with the sort of US market in the UK where we end up in non-compliance because, with the best of intentions, someone has maybe just paid the tax in the wrong place.
Exactly. Unfortunately for US citizens, there are a number of very common US planning tools which are bear traps in the UK. Limited liability companies are one of them. The US treats it a certain way. The UK treats it, HMRC purports to treat it differently. Another one is US living trusts. Again, taxed in a certain way in the US. Depending on how that trust is phrased and constituted, potentially taxed a different way in the UK. And that's where the differences arrive. And I have total sympathy for a taxpayer who's come to this country, is paying full tax on, let's say, an LLC or a living trust in the US and thinks, well, that's done and dusted, tax paid over there. Why on earth has HMRC got anything to do with it over here? That's where they can fall into what we'll call non-compliance or an inquiry or dispute.
I think there's a cultural aspect as well for a lot of Americans resident outside the federal USA. They know that they have worldwide taxation to the IRS. They pay their taxes to the IRS. Insofar as the IRS is concerned, that's where they should be paying their taxes. And so for Americans, it is the most natural thing in the world to continue paying tax on structures that they've got in place to the IRS because that's what's expected of them. And often we find it's a huge surprise to them when we say, do you know what? Actually, sorry, but you oughtn't to have been paying your tax to the IRS in this situation. The US doesn't have primary taxing rights over this particular item of income or gains, for example. And let's say the UK does instead. That comes as a shock. And so what we often find, as you mentioned, Aidan, is that they paid tax in the wrong place. And that causes a number of difficulties. It causes a tax difficulty here because they've been non-compliant. And it causes actually a difficulty for them in the States because if they've got to pay tax here as well and they don't want double taxation unrelieved by the treaty, then they need to get their money back from the IRS where they oughtn't to have paid it in the first place, but did. That can be really tricky.
Yeah.
And not a question for us, fortunately, question for our American colleagues. But I understand potentially really tricky to get money back out of the IRS.
Particularly because, as you say, from the IRS's perspective, they've paid the tax correctly, so why would the IRS relinquish it?
Exactly.
So let's imagine one of our listeners has heeded the advice of this podcast over the last 4.5 years and has taken advice on a matter of US, UK tax or estate planning or something like that. And the result has been an explanation that there has been a degree of non-compliance in the UK. What should that person do first? Maybe, Jamie, I ask you the question. What's the first thing that person should do?
Well, always seek prompt professional advice, whether that's from us directly, whether it's from an accountant in the first instance. It's really important that happens quickly, not least because HMRC takes the view that where you discover non-compliance and you haven't made any attempt to rectify that within a reasonable period of time, which might be as short as 3 or 6 months after finding out about it, that is intrinsically careless conduct. And if it's careless conduct, then penalties will apply to it. So the clock starts ticking immediately that you've got a difficulty. So quick work is absolutely the watchword.
And Henry, sort of jumping from what Jamie said about carelessness, so it's an important word. We're going to come back to carelessness in a bit. When someone's thinking about gathering together the information that they might need in order to become compliant. There is a question with variable answers as to how long back in time they might have to go in order to bring themselves into compliance. It's not always a case of saying, well, that thing happened a long time ago. Surely I'm not expected to have to talk about that. That's statute of limitations, or you often get thrown at you. But the level of culpability that you have and the form of non-compliance that you have can sometimes affect the distance back you have to go to make yourself compliant.
Exactly. We talked a bit about on the previous podcast in the context of if you are to disclose everything that the reasonable HMRC officer requires to make their decision, then you have just a window of 12 months. That can stretch out all the way up to 20 years, depending on the circumstances. So it is bizarre almost to think that you will be filing tax returns, at the end of this month? 20 years from that point, HMRC could come knocking, asking for more information, accusing you of non-compliance in other ways. And it is on the taxpayer to retain records as well to be able to prove their tax returns should they need to.
I'm just now thinking back to what records I was keeping in 2005 on
when you were barely out of short trousers.
I was thinking more about the quality of my computer and the 3.5-inch floppy disk I probably still stuck in my computer in 2005. Jamie, when we are thinking about bringing ourselves into compliance, clearly a first part of that is that we have to notify HMRC. We have to decide how we're going to notify HMRC. There's a timing question. You mentioned 3 to 6 months, etc. Getting over the hurdle of coming to HMRC before they come to you, there is a initial strategy question about how to file, what avenue to file through, and how to make that disclosure, isn't there?
No, absolutely. Well, let's turn that around first. In the ideal scenario, we would always go to HMRC before they come to our client and say, look, there's some non-compliance here which we need to tidy up. That happens more often than not, but there are a reasonable number of cases actually where HMRC comes to the taxpayer first and says, we think that you've got something to tell us, haven't you? And HMRC are known for writing what are called nudge letters, where they think that people have a particular characteristic, they've got a particular type of taxable income, for example, that may not have been filed correctly. Those are widespread and generic. They're sort of semi-intelligent insofar as to say HMRC know or have reasonable suspicion that you have the relevant characteristics, but they don't necessarily know whether you have filed correctly or not. So they will go to everybody who HMRC think have those characteristics. Then there are more targeted inquiries in which they will write a letter to a given taxpayer and say, we're opening an inquiry into your tax returns for the following years because we think you are non-compliant in the following regard. The bad news about the latter is that if they write to you first, it's a prompted inquiry into your affairs, then if your conduct is treated either as careless or deliberate because you didn't take proper care of your tax filing or payment obligations, or you deliberately decided not to comply with them, and they come to you first, then a much higher rate of penalties can apply, potentially as much as 100, in some cases even 200%. If we go to HMRC first and say, look, there's this mistake, but we're coming to you with clean hands and we want to resolve the issue, a much lower rate of penalties applies because the taxpayer gets the credit of having voluntarily disclosed their error.
What happens if HMRC isn't entirely certain that you might be non-compliant, but they have a good suspicion that they want to ask more questions? You've raised, I know with me, and I'm sure with Henry as well, HMRC's powers of discovery and investigation. So they will sometimes send out information requests, and I say request, I'm using request in the loosest possible sense.
It is technically a request that they will make in the first instance. HMRC have statutory powers to require taxpayers and others to provide documents and information. Those aren't typically used in the first instance. They ask nicely to be given the information and documents first. And only if the taxpayer fails or to provide them or declines to provide them, will HMRC then use their statutory powers to compel the production of that information on pain of penalties.
It's like a parent asking the child to comply with the carrot, and if the child doesn't comply with the carrot, they're getting the stick.
The big old stick follows. And exactly right. And Henry and I have a number of cases, but one in particular I'm thinking of, where that is precisely the territory we're on with HMRC. And the issue we are arguing about is whether the information and documents they're now requiring our client to provide is reasonably necessary for them to conclude their inquiries. We say it isn't, so we don't have to provide it. They say it is, and we're going to charge you penalties if you don't. So a big old fight can happen about that. I failed to answer your earlier question, Aidan, about what you actually do. In the good old days, you could just write to your friendly local tax inspector and say, terribly sorry, there's this thing, and can we resolve it, please? That's no longer possible. There aren't local tax inspectors anymore. There used to be a number of disclosure opportunities which HMRC offered with very favourable penalty terms. The Liechtenstein disclosure facility is probably the most famous of those, but that closed some years ago. There hasn't been another like it.
This is where they open the floodgates and say, you all, the world, have X number of months or years to tell us all of your ills. Anyone who gets in before the door slams shut, we're going to. It's a moratorium.
It's a moratorium. Exactly.
Bring in trade in your guns, and we won't penalise you for having guns.
Precisely. That's exactly what it was. But that only works if it's going to come to an end at some point, and the big stick follows. Well, that closed. The big stick has now followed. There is no equivalent procedure now. So what we're left with is what's called the Worldwide Disclosure Facility for offshore tax disclosures, and the Digital Disclosure Facility for onshore. There's no moratorium there at all. There is no reduction of penalty regime. It's just the facility by which you have to report non-compliance to HMRC, and that's what we will use. And the way that works is you will register for it in the first instance. You or more commonly we or some accountants on clients' behalf. And to do that, you just have to express an intention to file a corrective return, a form that's filled in, and then that gives you 90 days to prepare the substantive disclosure and to send that to HMRC with payment of the tax and a contractual settlement offer to make the issue go away, inclusive of tax, interest and penalties.
From your perspective, Henry, as I accept the more junior of the duo sitting in front of me, 90 days, plenty of time. Everyone sits on their laurels and thinks, it's 3 months away. That's our problem in the future. Let's not worry much about it. Or is 90 days actually quite a short period? You can sense where I'm leading with this question. Quite a short period of time, and actually you really have to get your skates on to hit that deadline.
Plenty of time, no problem. Honestly, it comes around so incredibly quickly, particularly when a client's affairs or just paperwork is not well in order. And going through the documents takes a long time in of itself, even when we've got the assistance of accountants on board. And then invariably the client will mention, oh, well, actually I had a distribution from this at this time. And that totally changes where the goalposts sit in the context of their disclosure. I mean, often we'll be saying, okay, on the facts that you've given us, what was the old remittance basis of taxation was favourable to you. New facts arise. Oh, actually, no, on the arising basis, but you've got to rerun the calculations, rewrite the letter, redo the form, etc. The goalpost always seems to be moving. So 90 days comes around incredibly quickly.
Do I have to use the WDF process even if it's 12 months later and I've realised that something that was in last year's tax return was in error, but actually it was small or it was large as an error, but I'm actually only going back and correcting 1 year? Where's the point at which a corrective return turns into the WDF?
Right, the amount of tax in dispute is not material. You're right, Aidan, it's a timing point. If the error is discovered within 12 months of filing the return, the taxpayer can go back and simply correct his or her tax return voluntarily.
Which is another incentive to get onto it quickly.
Oh, completely. absolutely. And the way that might commonly arise, for example, is if we are instructed, having replaced somebody else, because let's say the client had lost confidence in their previous advisors, we have the first thing we do is we look into what was done, what reporting was made, and we discover an error. If we're within 12 months, we can just correct it very simply. The issue arises if an error is found more than 12 months after filing the return. So any return other than your most recent one, it's not possible voluntarily just to correct. And so that means that we're automatically within the disclosure facility. Very often, particularly with American clients, we find that where an error has been made in 1 year, the same error has been replicated across all relevant tax years during which the client was living in the UK. So more often than not, in fact, I'd say almost invariably, we will find that there's a need for us to do a disclosure.
Henry, when we're making that, let's say we are in the WDF and we're making that offer to HMRC, we're not just making an offer as to the quantum of tax, the total tax, we're also making an offer as to an amount of interest up to a certain date, the intended date of payment. But we're also, and this is where I want to take the conversation next, we're also making an offer as to the level of penalties, which is governed by the level of culpability that we purport our client has engaged in. Am I right?
Exactly. The penalties is where there's most scope for adding value for our clients. The tax is where it is. The interest follows the tax. Worth noting at the moment that the interest rates are in the region of 8%, I believe.
It's quite high.
Very high.
It's extraordinarily high, especially when they pay 2% on, give or take, on overpayment of tax.
Exactly. So the delta there is significant. So the interest follows the tax, but the penalties is where we've got scope to advocate for our clients in their disclosures. And the penalties, largely follows the conduct of the taxpayer. The more egregious the conduct, the higher the penalties will be. So what we will do is squarely address the statutory test for the penalties and apply them thoroughly to the circumstances in each case and invite HMRC to agree with our analysis of the penalties.
Is this when you say showing, telling and helping to me that you're making every possible efforts to make HMRC's job as easy as possible?
It's helping, telling, giving.
Oh, I was close. I was so close. Damn it, I was so close.
That's one of the schemes by which you can reduce the amount of penalties is if you help HMRC, if you go out of your way to tell them all the required information and you give them all of the underlying data and you do so quickly, that can reduce your penalty rate in the context of some penalties. Now, because this is UK tax we're talking about, and UK tax is insanely complicated, so unfortunately is the penalty position as well. And, one or more of half a dozen different penalty regimes can apply, and can apply in different tax years as well. So penalties is actually one of the most technically complex parts of our job. But Henry's absolutely right. It's one of the points where I think we can add huge value to the client. The reason is this: there is a tension for us in getting the best financial return for our client in terms of them paying the lowest amount of tax, interest and penalties, particularly penalties. And we could, if we wanted to, go back to HMRC on every single one of our files and say, this is a clear case of innocent error. Our taxpayer client simply didn't know, couldn't reasonably be expected to have known that they should have reported and paid tax on this. So therefore, no penalties. Thank you very much. Now go away. And we don't do that. And the reason is because in our experience, if that isn't true, you instantly get onto the wrong foot with the HMRC inspector dealing, because the inspectors who deal with disclosures are the more seasoned, more experienced, more technically capable, more wizened with, hard-nosed real-world experience, and they're not going to be fooled by that. And so one of the real jobs of work for us is to talk to our client very candidly and robustly about what we think their actual penalty position is likely to be. What I very often find myself doing is saying, look, we've got an argument, if you want, that we could say this was innocent error. And it's a roll of the dice. It's a 50-50, and they might go for it or they might not. If they're not persuaded, we've got a fight on our hands with them to try and persuade them of this preliminary point before we get anywhere. And, that could go on for months and could cost a lot of money in terms of legal fees. And in some cases, probably the majority of cases, in my experience, there's a lot to be said for saying to HMRC, look, this is one of those cases where we might be able to justifiably claim innocent error. But you know what? We're not going to, because the client accepts that actually they ought to have paid this. They're very sorry. They didn't know at the time, but they accept in hindsight that perhaps they ought to have known. And for that reason, we're filing on the basis they accept they were careless.
I mean, and just expand on that point as to where the bar is for innocent versus careless, because I didn't know because no one told me is not the same as, well, you could have known had you gone and taken the proper advice.
Yeah. And HMRC say the latter is, well, they say both could well be careless. A great example is the recent case of Angela Rayner, MP, former Deputy Prime Minister, who had to resign from the government because she incorrectly stated her stamp duty land tax obligations when buying a house. She said, I paid the right amount of tax because I asked. It turns out she didn't. And nor did she actually ask the right question. No tax expert was instructed to give her the answer to the specific question that arose in her case.
Even though she didn't know the question to be asked per se, because she's not a tax expert.
Precisely. And
she thought she had the appropriate counsel given. That doesn't mean that it was innocent error.
Quite. That's exactly so. And I should say, we don't know publicly what HMRC's view is on whether she was careless in a tax context. I have to say my own suspicion, dealing with this a lot, is that I think she probably was. And so, ignorance is no defense. If the view is, well, you should have known, you ought to have known. A reasonable taxpayer in your position would have known and dealt properly with this. Then the fact that you didn't know is not going to cut it.
So we've engaged in this negotiation with HMRC. They've either accepted it, they've been bowled over by the quality of the settlement made, and they think, good Lord, the reason behind this is sound, and we will take what we can have with open hands. Thank you so much. Or they're going to say, no, because, and we're going to have a discussion about where we can get to. I mean, at a point, maybe a question to Henry for you or for Jamie, whoever wants to answer, at a point, HMRC are going to go, that's our offer. You either accept it or we go to the next stage.
It's not quite how it works. You see, it's for the taxpayer to persuade HMRC that the taxpayer is correct. And if you can't do that, ultimately HMRC are the revenue authority, they're going to issue a closure notice or a determination telling you that the tax is going to be payable according to their view. At that point, the onus is then on the taxpayer again to say, well, do I appeal that to the tribunal or do I fold? They don't, as a general rule, put a proposal to the taxpayer. In fact, they never do. It is always for the taxpayer to put proposals to HMRC, with the possible exception of ADR, as a mediation, which again the proposal needs to start with the taxpayer. But in the mediation process, both sides can put confidential, without prejudice, proposals to the other in a view to settle any particular dispute.
I mean, does that, Henry, in essence, does that mean if I am a taxpayer and I am, having disclosed the offer to make it and how to make that offer and how much to draw out that process, at a point I've got to accept either HMRC is going to agree with what I've said and they're going to take my offer, or they're going to disregard it and they're going to make a final assessment, as Jamie had said, in which case that's the amount of tax I've got to pay, or you have to be prepared to put on your litigation pants and you then have to take it to the first tier tax tribunal. I mean, in stark terms, you have to be prepared, I imagine, as an advisor to lay those out in front of the client.
You absolutely do. And it's a very commercial decision at the end of the day. It will totally depend on the quantum of tax that's at stake, how significant that quantum of tax is compared to the taxpayer's sort of level of overall wealth. That will determine whether it's worth the fight in the tribunal. It's where Jamie comes in on prospects of success for the client. It's worth mentioning a bit about the cost regime in the first tier tribunal as well. As a general rule, the winner does not get their costs back unless you opt into the regime or there is some sort of manifestly unreasonable conduct of litigation by either party. So even if you win, you're not getting your legal fees back.
How does that rub up against, I mean, I use the word justice in a very lofty sense, but if I'm a taxpayer and I maybe I think I paid tax incorrectly, or maybe I don't in my heart, but I don't have the money to run the case against HMRC, I really have no option but to fold at that point.
Not necessarily. I mean, remember, the first tier tribunal is a tribunal, not a court. Its rules are deliberately set up to be flexible. The overwhelming majority of appeals heard by FTT judges are by litigants in person. They are not represented by people like us and Specialist Tax Counsel. They are people who turn up and talk. Now, tax is complicated. Is that difficult? Yes. Is it possible? Absolutely. I acted pro bono in the upper tribunal in a case which was won by my client, whose wife appeared for him, represented him in the tribunal, and who alone of anybody, including experienced tax casees, had identified the error in HMRC's argument, which it had applied to hundreds of people before and since. And she said, she was a wonderful lady, a piano teacher, no tax expertise at all, but she had identified this issue. And she went to the tribunal with no experience at all, argued the point and won. And I'm pleased to say we won for her at the upper tribunal and the Court of Appeal as well. So it is possible, and it happens a lot. Is it advisable where we've got complex issues of law or fact? It really isn't.
I know this is a question that you can't answer because we wouldn't act for a litigant in person because...
Well, by definition, if we are acting, then they're not a litigant in person.
But if we were asked the question by a client, I keep my costs down. I represent myself. I'm a litigant in person. HMRC is they're going to run up such costs. If I make a nuisance of myself, then surely at some point HMRC is just going to think this is just not worth the fight anymore. I mean, I was being sarcastic, but I was wanting to address it.
Well, so HMRC have what's called the litigation and settlement strategy. It sets out the rules by which they litigate cases. And that was brought in a few years ago after a previous Director General at HMRC was accused of making so-called sweetheart deals with big taxpayers. And HMRC were really quite wounded by the very strident criticism of them for that process. And it sets out, in cast iron, set in stone rules what they can and can't do. And if they are taking a principled decision that something is the case, the fact that either there's not very much money in dispute or that the taxpayer makes him or herself a complete nightmare is totally irrelevant. And in fact, if anything is going to impede the sympathy of the tribunal and the revenue, it's people taking unmeritorious points. It's people making a nuisance of themselves. It goes down very, very badly.
So I shouldn't treat the first tier tax tribunal like I might treat one of my utility providers who wants to jack up my prices. And I think if I sit on the phone with them for long enough, they'll eventually cave and they'll just give me hopefully a small reduction.
Please don't. No, don't do
that. and just seriously on that that is where you do run the risk of completely unreasonable litigation conduct, and you could find yourself with a whacking great bill.
I did see one judgment where a taxpayer had said, well, there's this VAT issue thing, and they say it's deliberate and concealed, and I don't accept that. And anyhow, I brought in tens of millions of pounds of inward investment into the UK. So, taking the rough with the smooth, can't we just call it bygones, and that'll do? And of course, HMRC didn't take that view and insisted on the VAT being paid. And then the same taxpayer, when he appealed to the tribunal, tried the same line with the tribunal. Said, well, HMRC wouldn't see commercial sense, but I trust the tribunal will, know where right and justice lies. And the tribunal didn't either.
No. With the time we've got left, what I want to then reflect on is, of course, that the first tier tribunal is not the only tribunal, not the only court that one might go to. So, again, if we cast our minds back as far back as we can, we might recall that we were talking about limited liability companies and how that was a case that went up through the courts. If we are unlucky enough to have failed in the first tier tax tribunal as a taxpayer, and HMRC has been successful, or if that matter, if we were successful and HMRC was unsuccessful. I was
going to say that's in some ways the worst outcome. You win in the FTT and you think, great, brilliant. And then HMRC says, well, we don't accept that.
So what happens?
So the loser in the first tier tribunal has a right to apply to the judge in the first tier tribunal for permission to appeal to the upper tribunal, which is the more senior court in these circumstances. That judge can grant it, in which case it is automatically sent up to the upper tribunal, which will hear it. They can refuse it, in which case the loser then has the ability to apply to the upper tribunal directly, which has the ability to grant or refuse that application. And it sort of then goes from there.
One difference between the first tier tribunal and the upper tribunal is, we said at the beginning, that first tier is a non-costs jurisdiction, so the winner won't automatically get costs unless it's a complex case and you opt in to costs or there's unreasonable conduct. The upper tribunal, as with normal courts, is a cost regime court, so the winner can expect to get at least some of their costs
including
back.
In the first tier?
No, not including in the first tier. But let's say you won in the first tier, HMRC appeal, HMRC win on appeal in the upper tribunal. You, the taxpayer, would then be faced with paying their costs as well as your own for the appeal. Pretty stiff.
So we don't take litigation lightly, I think, is the thing to be said here. And it's the point you made, Jamie, right back at the beginning, that most cases will settle. Most cases we advise on, we encourage. I mean, I think we are even obliged as lawyers to encourage settlement. So the fact that one challenges HMRC does not mean that you are necessarily going to find yourself hauled up in front of the courts. But you have to be prepared that unless you're going to stick it out, that always remains a card on the table.
Yeah. No, we don't litigate lightly. It's a last resort. A few years ago, there were suspicions that people thought of tax tribunal litigation as a way to kick the can down the road, and a decision postponed was a decision won, basically, for as long as you can postpone it. That has very much changed, and that's certainly not how we approach it. So we don't litigate lightly. We would advise our clients about prospects of success at the first instance, and more generally. We will take into account the importance of the case, the amount of tax in dispute, the costs of the case, which is a huge factor, to give listeners or viewers an idea of what we're talking about with costs. The lowest professional fees that of a case that I've been involved with through to completion of the FTT is about £50,000. Not a small amount of money. The most is $500,000. That's extreme. Those are the extremes. But for a normal case of the sort of complexity that we would expect to deal with, you might expect it to be 100,000, possibly 150, if there's lots of difficult factual elements or if expert witnesses are required. So somewhere between 50 and 150,000 pounds sterling is, a rough rule of thumb of the sort of cost these things are likely to take.
So when your lawyer comes to you and recommends that maybe you do go for careless because careless has penalties of X, but that's an all-inclusive offer that you hope HMRC is going to accept, that's because we're trying to head off the prospect of having to take a step further and therefore engage in the litigation costs that you just mentioned.
That's definitely one of the factors.
So the question I asked you both last time, I'm going to pose to you again. Standing on your soapbox, what do you wish people, this is your 30 seconds, what do you wish people that are listening to this episode, maybe they've stumbled across it and they've discovered that they are in this position? Henry, I'll ask you first. What is something that you would encourage them to do first, or what should they know?
Don't bury your head in the sand and hope it goes away. Facing up to this promptly, as we started off the episode talking about, is crucial, and keeping good records. It's something I alluded to earlier, is that there is an obligation on the taxpayer to keep records which can prove their tax return. It's a bore, particularly in one's personal life, to keep good records, but that's my piece of advice.
Good lordly answer. Jamie, what about you? What should people know and what should they do?
Do you know what? I don't think I can improve on Henry's answer. I mean, he's absolutely nailed it, which I'm very pleased about. So no, all of that. I guess don't stick your head in the sand, but conversely, don't be over afraid. We have some clients who, for cultural reasons, find any disagreement with public authority really disconcerting. In some places, it's not permissible or comes with potentially catastrophic personal consequences. That's not the case here. We're a rules-based jurisdiction where disagreements with HMRC are a factor of our tax code because it's so complicated. That happens and we can manage it. The important point is that clients get good, sound, commercial, legally robust advice as to the strengths and weaknesses of their case, so that they are put in the position that they're empowered to take the right decisions for them. And just because Henry or I might think that we've got a cast iron open and shut case, let's go for it, we'll win it, doesn't necessarily mean that would be the right decision for a given client.
Do you know what the nicest part of this conversation has been? Is usually I come away from these conversations feeling like everything has just been all doom and gloom the entire time. And actually, we've been telling people all these horrible things that can go wrong, and there's so many landmines that they've got to walk across that they won't ever leave their house. But actually, I think what you guys have done is help explain there is a process here. There are lots of people that have treaded this path before. And as you step forward, come forward early and take the advice. And you guys know what you're doing. And better to have someone on your arm who knows what they're doing early, can help you with it, because they're going to save you an umpteen amount of tax in the future, as well as headaches, time, cost, etc.
It's the peace of mind, I think, that's actually one of the biggest things for us. When you realise that you've been non-compliant, whether it was accidentally or even if it was deliberately, things are never as bleak as you might think they are. And we have seen it all before. I've had clients who, one client in particular, who had failed to return income from property rentals for 30 years. Later sold the house because he hadn't declared the income, didn't know whether to declare the CGT, because if he did, it might. And so he didn't. And HMRC came to him, and it turned out he'd kept meticulous records of everything for the whole of that 30 years because he knew the day would come around. He was dreading it, and he got himself into such a pickle that he didn't know how to deal with it. Sadly, they got to him before we got to them. But even in that case, actually, I negotiated an amazing outcome for this client. I mean, but in a pounds and pence basis, a fantastic penalty reduction on helping, telling, giving. And it wasn't as bad as he feared. In another case, we've got clients with very serious HMRC inquiries and investigations against him, some very big numbers. And again, we're proactively dealing with it and having a positive relationship with the HMRC inspector, where they've got confidence in us because they know we will play things with a straight bat. We can, and in almost every case, will achieve a better outcome for the client than they might expect.
I think to what you said 2 minutes ago, I think I want to title this episode "How Not to Get Yourself in a Pickle." I can't think of a British way of labeling a tax podcast about disputes and inquiries and investigations as how not to get yourself in a pickle.
Will our American friends understand? I hope so.
How not to get yourself in a game.
They didn't want to.
Jamie, Henry, thank you so much for coming on again. It's been a real pleasure in this lovely parlour, studio, drawing, whatever we're calling it. It's a real treat to have you both here. So thank you so much for coming on again today.
Thanks, Aidan. Bye.
Thank you, Aidan.
Thanks for joining us today on this episode of US UK Tax Talk, and my thanks to James and to Henry for joining me again. A reminder, we're now releasing episodes on a monthly schedule on the first Wednesday of each month, so make sure to like and subscribe, and that way you won't miss an episode. We're also available as a video podcast on Collyer Bristow's YouTube page, so if you haven't gone there yet, I encourage you to take a look. Until next time, thanks very much.